Teddy Keckstead from Forex Trading Unlocked, and we are here on April 22nd, 2020 with a live Forex market analysis breakdown for you and live trading examples. Before we get into it, we want to get to our disclaimer real quick to remind you that this webinar is for illustrative and educational purposes only. Remember that you are watching this in the past, so don't try and emulate these trades. Just learn how to trade various markets and different strategies and things like that, and then if you want to incorporate that into your own strategies, that's up to you. But this is only for illustrative purposes. If you want to follow our signals and join the signal service and have them execute it for you, and blah, blah, blah. So with that being said, we want to remind you that we had a bunch of high probable Japanese candlestick patterns that had occurred last week. We are watching to see how they have manifested. Most of them have run their course. A couple of them have not. And in case you want to learn how to trade them, read the book High Probable Japanese Candlestick Patterns, available on Amazon.com in paperback and Kindle version. With that, let's get to our live screen, meat and potatoes, what you want to see. So we have the Forex Trading Unlocked website pulled up here. We're going to skip past the numbers. The dollar index edged higher, pushing a little bit through the lower resistance band that it is targeting into. Is there much room to go? Well, I think we're going to still see a little bit of a positive push today. I think and maybe even into the rest of the week. But I think we're starting to run it out of gas, and I think we're going to start to settle into a range for the dollar index as a whole. So using the dollar index as an indicator moving forward may start to become a little bit difficult as volatility drops and we have a disconnect. Remember that certain currencies right now, the lesser currencies versus the dollar, they're trending very poorly versus the dollar, whereas some of the majors now are doing, there's an indifference. So we're going to take a look at what we have going on before we get into the individual markets to show you what trades we have on. So right now we still have a short position in New Zealand dollar, US dollar. We are short in the euro US dollar. We are short in the Australian dollar US dollar, and we are long the US dollar Swiss. So in other words, we're long the US dollar and short other currencies versus the dollar. So those are our four major currencies where we had signals that were triggered in, and we are going to go look at the markets on those too. But first, we're also going to look at our options. So besides having a long Swiss trade, we also have a 97.75 strike price binary option that we put on 2 days ago, and we also have yesterday rather. And then we also have a US dollar Japanese yen greater than 108.75 strike price also on. And both these options expire on Friday. We're pretty much right there near the underlying price. So the Swiss, we're looking for 97.75. It's trading at 97.12. For the US dollar yen, we're looking for it to go to 108.75. It's currently trading at 107.82. So not quite a buck for both of these we need for moves. So now let's get into the actual trade. So the euro US dollar, which had a signal last week that was a sell signal. This market also today is starting to show a little bit heavy as far as the actual range. It is just a little bit higher high today than yesterday, but it's still pretty much the same range as the past few sessions. We had made it, like I said, a little bit higher high over yesterday. We're just hovering above the lows right now, and it looks like right now, if the sell signal continues to manifest, that we will continue to go forward down towards this 107 area. Now this is where we're pretty much running into an extreme. We had all these numbers up for you yesterday if you checked the video, but we can pull up the euro US dollar chart from yesterday to get our target here. So we have a downside target of 107.46 for the euro US dollar. We had this dark cloud cover sell signal, and as you can see that the downside target is just below the last major swing low. So that would be the swing low here. Now if we take out this swing low, that would be indicative of what? A market that had made a higher move low, a lower move high, and then a lower move low. That would set us up for neutral to lower trading. And right now, while the dollar comes off of its bullish run, I would think that the major currencies like the euro and the pound, which are the two biggest components, they're going to start to buffer support and start to find a little bit of common ground and footing to set the base for that part of what I think will begin the beginning of a consolidation move trend, which will probably last. It could last a couple of weeks. It could last a few months. I think that because of the volatility that we've had, with interest rates being on their high, the interest rate contracts on their highs, meaning interest rates on their lows, and there's not much more to go. That's a component of currency value, is the interest rate component, and since that is pretty much frozen, I think that that's going to start to tighten your ability to have volatility in your major currency crosses. Anything can happen. We'll see. Right now, once again, we are riding this sell signal here with a dark cloud cover targeting this 107.46, and we'll see what happens. I think that still has a good shot at happening over the next day or two, maybe even into next week, depending on how this, as you can see, volatility has dropped. I mean, the range today is we have a high of 108.85 and a low of 108.20. It's a 65 pip range. That's what we were trading like before we had all this stuff in the middle of February going into the beginning of April. So before we had that 2-month run of intense volatility and wide ranges, this is what we were seeing in the euro US dollar. So this once again supports our theory that we might start slowing down as far as our volatility, which would give credence to range traders being able to capitalize very, very well as we move forward over the next couple sessions, let alone maybe even a couple weeks or months, where swing traders and especially bulls or bears as a whole are going to have a lot of trouble if they don't pick their points. So right now we are bearish that contract. So we go British pound, US dollar. This one also, second major biggest component of the US dollar index, is floating. What is this? British pound, US dollar. Okay, there we go. Now we got the right symbol in. Okay, so now we should have a chart. There we go. We do have a chart. So as we can see, remember the British pound was trading sideways for months going into 2020. Then we had Brexit on January 31st. No one even talks about Brexit. Isn't it amazing that we haven't talked about Brexit in a month and a half, and it just happened. It just happened. It's still going on, and nobody even talks about Brexit. It's completely overshadowed. Now, what do we have going on today? Well, we're right in the middle of the range from today. We have an inside day so far for the British pound US dollar, showing a little bit of strength, but does that mean that this market's going to be a bull? Well, it made a higher move high, and so far as of yesterday, this is a higher move low, should this low hold for another few sessions. But I think this also is just going with our consolidation theory, and that this is establishing a range. I'd be very careful with this market right now. We have a sell signal that was triggered here. We can look at this from here we go, the British pound US dollar chart. We're pulling up the old ones because these have the price targets for you. So remember, we had the sell signal that was in the British pound US dollar. We had a dark cloud cover a few sessions back. Yesterday, you can see we had this big break. Our downside target zone is $1.20 down to $1.18. So basically $1.20.23 down to $1.18.76. Pretty wide range. But with the volatility we've had in the pound, it's not unlikely for something that to occur if it should unwind. So that basically puts it right into there, this little area where that's at. That's what we're targeting from the sell signal. However, should we really be settling into this sideways range trade, I think you're going to find support holding up and this trade running out of gas. So I think there's still, I mean, obviously we still have a target that is lower. We still have room to go. But if momentum really is waning, I would be careful, because the longer this trade takes to manifest, if we don't continue to hit support in the pound US dollar over the next later on today into Thursday, let alone at least the beginning of Friday, then I think you're going to be finding some basing here, which is going to lend credence to a sideways to higher trade. Very choppy conditions, definitely, I think, that are most likely on the agenda for the British pound US dollar. Now, the US dollar Swiss, we had a complementary signal that went along with the euro US dollar trade, obviously an inverse because this is the dollar over the Swiss. And here we had this piercing line, and today, yesterday we made a higher move high. Today we're in the upper part of the range, but we are still failing to make new highs. But obviously bullish this market right now. We're looking for a little bit of a breach of resistance with follow-through following over the next couple sessions. But then I think we're going to run out of gas. Like, the ability for this market, even though we're breaking the downside resistance, keeping this market in a bearish mode, the upside support is very easy to fall through also. So I think the odds is that we are going to get into a range trade somewhere between 98.5 down to this 95.5 area. So this big zone here is where I believe we're going to see a lot of chopping around going on over the next couple months. So right now we are bullish. We are still targeting higher move highs a little bit. Let's pull up the number for you. We don't want to hold back on any target prices for you. So we, if you are a subscriber to our email, then you have these already in your own email box and you can check these. So anyhow, our upside target, like I said, it comes, irony is the target zone is right surrounding this upside pivot, which then lends credence once again to the potential for the US dollar to run out of gas and set the bands for support and resistance for both the dollar versus the other currency crosses. Now let's go and look at the US dollar Japanese yen. So over in Asia, we have a little bit of a different story. We have obviously the Australian dollar and New Zealand dollar, which we will get to. We are bullish to US dollar yen, but to talk about a market that's dried up and doesn't want to seem to make a move, this one's going sideways with very tight ranges after doing the same thing that the pound and all these other currencies did, and in a major way. So think about this. If major currencies are starting to establish this consolidation band, it's the lesser currencies where you're going to see the dollar still having trending, whether it's positive or negative. And the major currencies are most likely going to start to settle into a band. Remember, we mentioned interest rates earlier. As long as the interest rate contracts are on their highs and there's nowhere for them to go, and the Feds and all these other open market activities continue around the globe with central banks, they're just holding the interest rates at zero. They're holding them up. Until that component starts to fluctuate, I think you're going to see a range bound. Now, it may still be wide, but I don't think you're going to be able to hold trends very well with the major currency crosses until we get at least an interest rate move or a major shakeup in the equity and commodity markets as well, which may start to ripple into the next few months. It's very possible. We have to see how we come out of the coronavirus thing. Now, speaking of the coronavirus, let's take a look at something. Obviously, Spain and Italy are atop the charts just below the United States, Germany, United Kingdom, France. But look at Turkey. We've been talking about Turkey for a while. Now, this is a big deal. As we start to see these other countries climb, like Turkey, obviously Iran, we know what's going on there. This is where I'm talking about these lesser currencies. When you go down to and see like Mexico as well, Mexico has now, what is it? They are at 9,500 people confirmed as of today. Just a week and a half ago, they were just over 1,000. So that's, obviously you can do the math and see how things are still growing there. So once again, this lays credence to dollar support versus in our smaller currencies. But as things tighten up in your other countries like Japan and things like that, I think it's consolidating. We do have a buy signal that was triggered here in the US dollar yen. We're going to give you an upside price target. That's why we obviously have an option on. You can see our binary option that we have on is below our target zone, which is good because we only have 2.5 days left before expiration. So we need quite a move, not quite a move, but we need at least a dollar rally up into this area, which will fall short of our target zone, but that's all we need is to get to our strike price, right? So if we can get up to 108.75, very possible to get up to that area. That would be a good thing, obviously, for us. So we have a little bit of time left on that trade. We'll see how things manifest. But right now, this is just winding its coil, waiting to pop. Hopefully, it pops to the upside. If it goes to the downside, obviously, that won't work out for us. But if you take a look at what's going on in this trading zone, then we may have something that helps to support our long for the US dollar, Japanese yen. And that's the fact that we have the New Zealand dollar, US dollar, which is now lower on today. It's kind of inside day trading, not too loud of activity today, very quiet, but it is laying on support. Now, the one thing we did have is we have, obviously, remember we mentioned we have the position on for the New Zealand dollar, US dollar. Let's pull up the chart here so you can get a price target. Our target zone is below this last swing low, which would put us on the neutral to lower campaign. So we're looking for a breakdown that is 57.97 area to 57.18. Obviously, we have a nice little bit of a way to go, but that would be a nice little short. So if this sell signal still remains intact from last week, we have a little bit of room here. Now, this also goes with the fact that our lesser currencies, we're going to have a little bit more room to trend versus the dollar than, say, the euro or the Swiss or the British pound and stuff like that. So I think we're going to most likely get to see a little bit more of a testing of support over the next couple days. You can see today's trading is very light, but still the US dollar seems to be maintaining its strength. Now, let's take a look at the Australian dollar, US dollar. Now, as you can see, yesterday the market failed to make a lower move low in the New Zealand dollar, but yesterday Australian dollar did poke a newer move low. So what does that mean? We made this high, we made a higher move low, we made a lower move high, and now we made a lower move low. So we're neutral to negative these currencies. Even though Australian dollar, US dollar is positive today, we're looking for it to lean back onto support. Now let's take a look at the US dollar, Turkish lira. Remember we were talking about that, how it's moved up the chain. We've been talking about this for weeks, watching seen this grow, and as we're talking right now, it is on its highs. This is a market, it takes deep pockets to trade. Talk about a move that this market has trended so severely. I mean, when this thing corrects, it's going to be quite the break, that's for sure. It's going to take some deep pockets to be manage these swings. So this market still remains a bull, especially riding that coronavirus trade. Now let's go to the US dollar Mexican peso. Here's another market that has been very strong over the past month and a half. Now remember, when we looked at those numbers, now the Mexican peso has been trying to sell off. Now we did have a let's see, we have a upside target for the US dollar Mexican peso. It's coming up right now. We're pulling up our target chart. These are all in yesterday's video, by the way, or if you have our emails, if you're on an email list, then you would get this as well. By the way, go to forex-trading-unlocked.com and sign up for our email list. So remember, we were talking about a potential head and shoulders pattern forming. We had already hit the upside target zone, and our high of that was 24.67. Where are we trading right now? 24.56. The high is 24.62. So we fell just short of the upper part of our target range for the US dollar Mexican peso. Once again, let's go back to the coronavirus thing here and show you where the totals are. Now, still on a worldwide basis, 9,500 people isn't that big. Mexico is a big country in landmass. Most of it's concentrated in Mexico City. Hopefully it doesn't strike there. If it does, it could get very, very, very upsetting in how those totals could be. Hopefully they have things under control, but like I said earlier in the video, 2 weeks ago, less than 2 weeks ago, Mexico had just over 1,000 cases. Now they're at 9,500. So they're almost tenfold in a week and a half. Hopefully that doesn't happen over the next 2 weeks, because then we know exactly what that would do. That most likely would put the peso versus the dollar up in this 26 to 27, maybe even 28 pesos to the dollar. So we had this head and shoulders that is forming. If we run out of gas and all of a sudden the curve flattens and the US dollar takes a turn for the worse, well, then you might see a nice sell-off in the peso. But however, with the coronavirus trade in full gear and with the way we're looking, I think this is just a pause for the cause. Unlike a market that this wasn't consolidating in front of the majors, giving us a clue as to what's going to happen. I think this was a consolidation before it makes its next run for higher move highs. So even though we have, like I said, we have this that's the euro. Here we go. Here's the peso. We have this shoulder and a head that have formed, potentially shoulder forming now. We have this upward sloping support line that's keeping us in place, this neckline. But as we go higher, that just goes out further. And I think that, yeah, once again, this market is going to continue to be a bull. Now, US dollar Canada, here's another one. Now, this is when we talk about consolidation. Like, this market has been trying to consolidate for quite some time. And then even after yesterday poking higher move highs, once we go again today, now we had a buy signal here last week. Now, here's the question is for the US dollar Canada. Here we go. Let's see where our target zone is. So this market, like I said, has been trying to consolidate for quite some time, but then this one had one of the most explosive run-ups in the beginning of March before any of the other currencies. So yesterday we just tagged the upside target zone for this market. So what does that mean? Are we done? Well, no, we could still grind through resistance a little bit. This may be just a little reprieve, a little profit taking before it grinds higher. But this is also, once we hit that, we're running out of gas, which doesn't mean, so even though if we press higher move highs and take out this high from here, most likely this is a consolidation area, and I would start to think about over the next couple months seeing that this low back here from around here to this high back here, that basically the high in March to the low in April, this will be your containment range for the US dollar Canada as we move forward over the next couple months. I would be very careful with this one. This is going to be a range trader's delight. So all those people who are good at selling into highs and buying into lows, this is probably going to be your time to shine for the next month and a half, 2 months. So remember what we were talking about with these signals. They're all high probable Japanese candlestick patterns, which you can read the book, which is available on Amazon.com. Real quick, I'm going to pull that up for you just so you get a chance. Once again, so high probable Japanese candlestick patterns available on Amazon.com in paperback and Kindle versions. Remember, you can check that out, and I would definitely prefer you buy the paperback, but the Kindle version is good too. It'll teach you about how to exercise these signals and use them properly, whether it's in the Forex, the futures, the options, the binary options markets, what have you. So let's do a recap of the trades that we have on. We are short the New Zealand dollar, US dollar, and we are targeting 57.21. We have the Euro US dollar, which we are also short, and we are targeting 105.58. Then we have the long US dollar Swiss, which we are targeting 98.69, and we have the Australian dollar US dollar, which we are targeting 58.69. So some of these have our short-term targets, some have our extended targets. We'll see how these manifest. Right now we're doing okay in them, except for, let's see, we're down in, what is it? The Australian dollar, US dollar is a little choppy right now. So once again, I want to thank you very much for your time here. Please subscribe to our YouTube channel. Definitely check out the book, High Probable Japanese Candlestick Patterns. And no matter what, for all your Forex trading needs, go to forex-trading-unlocked.com every day. See what we got going on. Subscribe to our email list so you can know when these videos are coming out and when our trade setups are released. But also remember, this is all for illustrative and educational purposes only. You are in the past unless you actually subscribe for our signal services and things are managed for you. And that's when everything is, obviously you're following us 100%. But that would be by your choice then as a subscriber. Otherwise, please don't try and chase it. Just try to learn new approaches to managing your trades. And once again, read the book. It'll tell you how to manage these things in all different types of markets and scenarios. The biggest thing is to have a trading plan and money management and discipline on your side. If you don't have those three things, you're going to lose money. If you have those three things, you got a shot. So read the book, keep following our videos, subscribe, and